Hi, my name's Aisha. Welcome to my channel, or welcome back if you've been around here before. In today's video, I'm going to be getting back to talking about property buying. So there's always a scheme or two knocking around, and I've recently found out about a new scheme. And remember, although I do these videos and I give you information, it's just information. It's not any kind of formal advice. It's just for you to research further and think about whether you want to take advantage of some of the things that I'm telling you exist out there. Before I get into the video, I'm just going to quickly remind you to subscribe if you haven't already yet subscribed. Don't forget to watch the video all the way through to the end. And if you like it or you've learned something new, then don't forget to give a thumbs up as well. In a nutshell, for those of you who do like to skip, this scheme is called the Deposit Unlock Scheme, and it's a type of 5% scheme that the Home Builders Federation came up with. It's basically a collaboration between the house building industry and the lenders. If you want to find out more information, then keep watching this video. The Deposit Unlock Scheme, like I said, is new. So it was only launched this year in June, and it was just in the Northeast. And so it's only recently that it's just opened up like nationwide, because the lender nationwide has joined the scheme. And so that's made it possible for it to go across the UK rather than just in the Northeast. It's a mortgage indemnity scheme where the house builders guarantee the loan that home buyers take out. The house builders pay to insure the mortgage using the money that they've made from selling the house. This means that if a home buyer, for some reason, isn't able to pay their mortgage anymore and a repossession needs to happen, and maybe there's not enough equity to cover the cost of repaying back the loan, it means that it's all covered with the insurance, or at least part of it is covered with the insurance. So that basically means that there's less risk for the lender, so they're happy to give that loan in the first place. The Deposit Unlock Scheme is similar in a way to Help to Buy, in that it's only on new build properties, and also you only have to come up with a 5% deposit. How it's different to the Help to Buy is that the loan is actually just all mortgage, so that 95% just comes from the lender, whereas with the Help to Buy loan, it's the government that backs a portion of it, so whether it's 20% or 40% or somewhere in between those figures. It does mean that you don't have the 5-year interest-free period, because from day one that you're paying your mortgage, you're paying back interest on that whole 95%. But the good thing is it doesn't change. So with the Help to Buy loan, the amount that you pay back to the government can change, because if the value of the property goes up, then the value of the loan goes up. Whereas if the value of the property goes down, then you pay back less money as well. So it's good in that the amount doesn't change over time. If you're wanting more information on Help to Buy, I've already done a video on it talking about the pros and the cons, and some information that some people don't even know about Help to Buy, even though they have Help to Buy loans. And so if you want more information on that, I'll leave a link and you can check that video out for yourself. Again, the Deposit Unlock Scheme has similarities to the Mortgage Guarantee Scheme in that you only have to find 5% for your deposit. But the difference is this one is on new builds, whereas the Mortgage Guarantee Scheme is on older buildings. If you're looking for an older building, you would go for that one. If you're wanting a new build, then you would go for this one maybe. The reason why the Mortgage Guarantee Scheme was only on older buildings is because older buildings are less risky. So they're more likely to hold their value, they're more likely to increase in value, whereas with new builds, when you buy them, they can depreciate in value. So some people have gone on, especially those that own flats that are new build, they've gone on to sell their property at a loss because they're sold at a premium in the first place. Obviously, the last couple of years have been quite uncertain. So when they introduced that 95% mortgage, 5% deposit scheme, they wanted a bit more certainty by just putting it on older buildings. I guess the good thing about the Deposit Unlock Scheme is that it's for first-time buyers as well as second steppers. So again, I've said in a previous video that the Help to Buy scheme changed in April this year. So before, the Help to Buy scheme was for anyone, it was for first-time buyers, it was for second steppers, but they changed it and it's now only available for first-time buyers. So if you are a second stepper and you're wanting a bit more help, or you're wanting more of a mortgage on a new build specifically, then this kind of opens up a few more opportunities for people who are in that position. The Help to Buy scheme ends in April 2023, and the Mortgage Guarantee Scheme ends next year, at the end of next year. So hopefully if this one continues longer, then this might be something that can kind of take the place of it. I don't really know. They haven't really announced what they're going to do to replace the Help to Buy scheme, or whether they're going to extend it or whatever. I haven't seen any information on that. I have seen somewhere that this scheme isn't suitable for those who are self-employed. So that's something you could double check if you're in that situation. Quite a lot of the big names in house building have joined this scheme, so they're all participating. You've got Barratt Homes, Persimmon Homes, Redrow, Taylor Wimpey, Bloor Homes, so many of them, a lot of them are involved. There's about 17, I think, so there's good choice in that sense. The only thing though is that there are only 2 lenders involved so far. So it's the Newcastle Lending Society and Nationwide that are involved. So that isn't like much choice in terms of lender. So if you were looking to use it, you would have to go through one of those to get your mortgage. At the moment, Nationwide are offering loans on properties between £25,000 and £750,000, and their rates look as though they're like in line with what their normal rates are. Okay, so to talk about some of the positive things though, I'm a fan of 95% mortgages and 5% deposits because that's how I got onto the property ladder. I know some people don't like them, they think that they're more risky. Generally speaking, the rates are a little bit higher, but I think sometimes you've got to do what you've got to do to get onto the ladder, and you've got to make a smart, calculated decision. So if you can work your finances in a way that enables you to use this kind of a scheme to get onto the property ladder, and then you can sort of rectify the loan to value later, then I think it's a good thing. It will open up more opportunities for people to be able to get onto the property ladder or to move on as well. Because if you were a second stepper and you wanted a new build, there's not so much help out there for you to be able to get something of your dreams. So this is kind of bridging the gap between Help to Buy and what Help to Buy used to be. So yeah, I personally think 95% mortgages are okay with a plan. So you can set aside some money to then be able to overpay on your mortgage, and that will help to increase the equity that you have in it, so that later on when you remortgage, you'll have a higher loan to value. And in a stable housing market, which I guess it kind of is, it's been rising quite steadily. I know that growth has slowed down lately, but the crash that everyone was looking for hasn't happened yet. And so if you did get one of those 95% mortgages earlier, you're kind of okay. It's only when the market crashes that might be a problem. If you're not looking to move soon after you've gotten one of these types of mortgages, then it's not really going to affect you too much anyway. You just continue to pay the amount. If your rate is a fixed rate, it's just a fixed amount every month. And so you don't necessarily have to worry if there was a dip in the property market. You could just ride it out. If you're not planning on selling your house, then you're not gonna have to worry about that negative equity. As long as the property market is stable and prices are rising like they have been at the minute, then a 95% mortgage, 5% deposit isn't going to affect you too much. And I think maybe things will continue to rise or they'll continue to be stable. I know that everyone is looking for a crash, but I don't know about that. The reality is that not everyone can afford to save huge amounts for a deposit, and so a 5% deposit scheme is a good one to help those that have less to contribute. Some people are having to pay huge amounts in rent as well as trying to save for a deposit. Some people are solo buyers and so they've only got one set of finances coming together. There's so many reasons why you might not have as much money as you would like for a deposit. So I think it's nice to kind of give everyone a bit of an opportunity. Home ownership is a positive thing. It's an investment. It's good for generational wealth. And so everyone should be able to access it as much as possible. I guess another positive is just for the second steppers then. So the Help to Buy scheme changed. They couldn't get a loan on the Help to Buy scheme now if they wanted to apply to that. So this is something that opens up another opportunity for them. Also, I haven't seen anything that says if you have additional properties, then you can't use this scheme. Whereas with the Help to Buy scheme, even when it was for second steppers as well, they said you couldn't have additional properties, so you couldn't use the scheme. I've not seen that for this one. So maybe you can have like a buy to let somewhere and then you can still use the scheme, which is a good thing because again, a lot of people like to keep their first properties as a buy to let property, again, helping with that generational wealth. So yeah, maybe they might be able to use this one. Okay, so in terms of negatives, I think the first negative is just that it's not that open yet, where it's a new scheme. It's literally just this month that it's opened up nationwide. So you've just got those 2 lenders. There's no competition. You can't compare too many rates because they're not there. There is a little bit of a conflict of interest between the Deposit Unlock scheme and the Mortgage Guarantee scheme. How the government have set out the terms in the Mortgage Guarantee scheme mean that regardless of anything, if the lender is giving a 5% deposit, 95% mortgage, they have to pay the government money. So what that means is that if these additional lenders want to come onto the scheme, they actually have to pay twice for the one loan. So they have to pay the government because they're giving out a 95% mortgage, And then they also have to pay the insurance to cover the deposit unlock scheme as well. So they're paying twice, which isn't a good thing for them. Obviously, no one wants to pay twice for the same thing. So I don't know whether they would use that as a reason as to why they don't join the scheme, or whether they would just be like, okay, this opens up more opportunities. We'd rather have more mortgages on our files than less mortgages. So they might go for it. I don't know. Another negative, it might not be a negative, at least it's not a negative at the moment, is that it's only on new buildings. For the moment, there's the mortgage guarantee scheme, which people can use on older buildings. But when that runs out next year, if they don't put something else in place, then you can only get a 95% mortgage on a new building. Some people don't like to buy new builds, so that might be a problem for them. Another disadvantage, which again might not actually be a disadvantage, is that you have to go through a mortgage broker. So you can't just go to the bank and ask them to be a part of this scheme. You have to go through a mortgage broker, which might mean that you might have to pay fees. You might not, because some don't directly charge you, but if you go to one that directly charges you, then that's an additional cost. Sometimes I think it's nice to go directly to the lender, because I feel like the lenders don't ask as many of the silly questions that mortgage brokers ask, or what I perceive to be silly questions, because other people might not find them silly questions. So yeah, I find that when you go to the lender, it's direct, it's straightforward. But you know, if you want a 95% mortgage on a new build and you want to use the scheme, you've got to go through them regardless. Another disadvantage, and again, it might not be a disadvantage, it's just how you look at things and how things work out for you, is that it's a 5% deposit and a 95% mortgage. So with the Help to Buy scheme, you've got that chunk of money in the middle. That's the government-backed loan. And so you don't have to worry so much about having a massive mortgage. That's kind of the positive thing of the Help to Buy scheme. With this deposit unlock scheme, that 95% is just a mortgage, which means you have to qualify to cover the full cost of that mortgage. So your salary times whatever multiple they're using, whether it's 4, whether it's 5, whatever it is, that has to equal that 95%. So you'd have to make sure that you can actually afford that. So new builds are already more expensive than older buildings, so you might not be able to stretch to be able to get that mortgage on a new build. I do think that this is a better scheme than the Help to Buy scheme, in that if you could cover, and remember this is just my own opinion, if you can cover that 95% with your salary and get the house that you want on the deposit unlock scheme rather than the Help to Buy scheme, I think it's a better scheme, because I've already said in a previous video that I don't like the Help to Buy loan, in that it's a changing loan and it never goes down. The capital amount is still there regardless of the interest that you pay after 5 years, and I don't think that that's fair, and I don't think the changing amounts are fair. Whereas with this one, from the day you're paying your mortgage, you're paying the interest, you're paying everything all in one, and the amount is decreasing over the length of the term that you've got your mortgage for. So it's a much fairer way of doing things if you can afford that 95% mortgage. Although I can be quite negative about the Help to Buy scheme, I do understand that people need to do whatever's right for them, and if they want to be able to afford a better house, or they don't want to compromise on location and that's why they want to go for the scheme, then that's entirely up to them. I understand why people do it. It's definitely a scheme that needs proper thought. I feel like a lot of people get into it without knowing exactly what they're going for, and you definitely need a plan of how you're going to pay back that loan, and a backup plan as to how you're going to pay back that loan as well, because although you might have a good job today, you might lose your job tomorrow. Circumstances are always changing in life, and so it's good to have a plan and a backup plan as well. Overall, I do think this sounds like a good scheme, so I don't really see any dodginess. I know, again, some people don't like the fact that on a 95% mortgage, you're going to have a slightly higher rate. But if you take that all into consideration, I don't think that there's any dodginess in it. So at least that I can see. Maybe if you research into it further, there might be clauses that mean certain things. But again, it's better in that you own the home yourself with your mortgage. Again, with the Help to Buy loan, somebody else has a stake in it. You can't just do renovations galore. You can't just do what you want with that property. You have to get permission. So you're kind of a bit more free when you've got the deposit unlock scheme. It just sounds a bit fairer overall to me. I do think though, and it's the same thought that I have with all of the other schemes, is that they're all designed to keep the house building industry going, and also to keep property prices stable or at least rising, because if there's more lending and it's more free, then people use it more, people will pay a little bit more because they can get more, and so everything just keeps going up and up. And obviously I'm a homeowner, so that's good for me. If my asset is going to keep appreciating in value, that's good for me. But I also do understand that there are so many people out there that actually want to get that first leg on the property ladder, and if things keep going up and up, it just moves the goalposts, so they have to save more of a deposit, and it's just going to take a longer time. And I think it's unfair in that sense. If things are stable, then people can kind of work with that, but if things continue to rise, then it just makes things so much more difficult. It also makes things more difficult for people to move on as well. So even if you're already on the ladder, and if property prices keep rising, they don't rise in line with how much wages rise. And so again, your dream of moving on or getting that forever home kind of get pushed down the line. It's almost like a game of, oh, things aren't affordable for people, let's put this scheme in place so that they can afford it. Let's make it a little bit more unaffordable. Then let's put another scheme in place so that people can afford it. And it's just up, 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 up. And like, where's the limit? And I feel like maybe there is no limit, because if you think about things like the Help to Buy loan, I was reading an article the other day where it said that I think like 70,000 loans have been paid back on the Help to Buy, and they've raised like £315 million in profit. So 10% profit, £315 million. If they can make £315 million in 8 years, why would they not want to make more money? So every time they support the house building industry, every time prices can rise, those loans go up. When people pay them back, they're getting more and more and more money. If the market was to crash and prices go down, then they would lose money. So it's not in their interest, either the lenders or the government, to allow the property market to dip or crash, at least not too far anyway. And if you think about it, they're all landlords anyway. The bank owns a lot of property. People in the government own a lot of property. Who wants their asset to depreciate? No one. So yeah, I just think that these things are designed in a way to keep things moving upwards, and that's not good for some people. It's good for homeowners, but not so good for people who are trying to just get a start. Like I said though, the scheme is still new, so there's not very many opinions out there on it. So a couple of people, I think it was a very small amount that they launched in June when it started, and so now that it's opened up like nationwide, it'd be good to see what people who actually use the scheme think of it, and whether they like would recommend it or not, or whatever. So if it's something that you're interested in, I guess listen out for any like feedback on it. That's pretty much it on the deposit unlock scheme. Let me know what your thoughts are in the comments, and don't forget to like this video if you've learnt something new. Don't forget to subscribe if you haven't already subscribed. Share the video with a friend if you know that there's someone out there who's currently looking to buy a property or move on. It might be good information for them. And take care of yourself, and I'll see you in the next video.